Hi, Cephas. You want to say something quickly about Holy Week since you're...
This is Holy Week. Be holy.
Michael used to be the producer of a Catholic television station and radio station called EWTN. He did that. If you know anything about Mother Angelica, Father Benedict Groeschel, Father Pacwa, and the like, Father Crappie, this guy used to work with all these people, and I just wanted to bring that up.
Yeah.
He knows this stuff. So, happy Easter, happy Holy Week. Let's continue.
Yeah, by the time you see this, it'll probably be Easter. So good. Good, happy Easter, yeah.
Okay,
He is risen indeed.
Yes.
Okay, go ahead.
Okay, so I sent out a strategy report a couple days ago, and I want to kind of touch on that. And then we also want to talk a bit about SoftBank, probably one of my favorite stocks going forward, in addition to medical marijuana. Okay, so a lot of my strategy is various things that I read of good sources, and then I get a lot of very good work from a group out of Richmond, Virginia called Riverfront Investment Group. I've known these guys over 20 years, and they do very good work. Their three tenets is price matters. So I am value driven. The kind of money you're going to make on a stock depends upon what you pay for it. So you could buy Apple Computer at $240 a share, and it may be a lousy investment, although it's a great company. You bought it way too high. We bought it 10 years ago. Price matters. It depends. If things are undervalued, that's where you want to step in. The second thing, don't fight the Fed. The Fed, when Fed's raising interest rates, then we got to be very careful. The Fed stopped raising interest rates.
So that's good.
And then the biggie. I'm huge on investor psychology. When this market was taking a drastic move down in December, we vacillate on fear versus greed. There was a tremendous amount of fear. When everyone's afraid, they're dumping stocks without even thinking. Terrible time to sell stocks. Terrible. If you sold in December, you've lost a lot of money.
Yeah.
You know, just a quick down and dirty example is SoftBank. We paid $25 to $29 a share for SoftBank in 2015. Okay? And it really has done very little. It really has. The stock hit high 40s, $50. And then when the scare hit December, it got down as low as $32. And if you sold anywhere between 32 and 40 or 42 or whatever, you've lost a lot of money because the stock today is $53. And this is just the beginning, in my view. So let's continue.
Let's talk just a little bit about SoftBank, though. What is SoftBank? Explain it to me. Like, in a certain sense, it's kind of like a mutual fund, but it's a stock that buys other stocks. This company is in technology, they're in communications, and they're out in Silicon Valley, basically. And what they're doing is they're looking at all the ones that are out there that are doing stuff, and they're strategically targeting the really good ones with a lot of money. So they're putting money into those and then making money from it. And it's kind of interesting because the fact that they're investing in it is part of why these companies do so well, but at the same time, they just have a tremendous track record. It just is working. Every one that they're citing out and deciding to invest in is doing really well. So they've obviously understand their business and what they're doing and how they're investing, but it's a great one to get involved with because you're going up with all the other stocks. You're not just pinpointing one and putting all your money and time into it. You're getting a nice little raft of all of them, and they're all moving up. So
the CEO is Maya Yoshi's son, Japanese businessman, about 61 years old, and this guy
is like the Warren Buffett of Japan.
Exactly. Right? He's exactly doing what Buffett did as Berkshire Hathaway, but he is more technology driven. He wants to be at the front and center stage as technology with artificial intelligence, robotics,
all of the stuff.
Here's what he did with Uber. This is the interesting thing, and this is why the stock is really starting to move up, in addition to him buying back a ton of shares. Okay, so he goes to Uber about a year ago and says, we want to make a sizable investment in your company. We want 15%, and we want to pay X, which was below kind of the valuation, the fair value, so to speak. Well, I think he paid like $6 or $7 billion for it, for that 15% stake. Uber's going to come to the market probably sometime in May, and based upon where it's going to come in, his stake of $6 billion or so is going to be worth about 12 or 13 billion. So boom, he immediately picked up about $8 billion. So that's huge. That's a huge area. He has these ride-sharing things in, I think it's called Grab. And this is like in Asia, in India. He's got another one, I forget the name of it. So he has really has this this Uber-type strategy, which I think is a really good strategy.
Right.
I mean, it makes sense for people if they're going to go out and they don't want to drive and they don't want to park, or they actually drink too much alcohol. You want them off the road. You don't want them on the road. You take an Uber home, you don't drive, and that's just the way it should be. That's a little bit about SoftBank. I'm going to put a chart up, and I'm going to show you that this stock, in the fear factor of December, people dump everything without thinking.
Yeah.
And this stock was dumped in a lot of situations, and it was dumped at the worst time. I'm sorry. It's $53 a share, and in my view, that was extremely bad strategy. Extremely bad, because Michael Iannarino buys good companies and does not sell them, unless we have to. Very good. Okay, I'm going to go continue with the strategy. 35, there's a, because of Riverfront, they're saying we have approximately a 35% chance of this market. That's fine, no problem. Except Postman. We have about a 35% chance of this market really going down substantially. And a lot of factors could be the trade deal with China is not going to go through. The probability of recession starts to increase. And there was a couple other factors. Brexit gets ugly because, what's her name, May?
Yeah.
She wants to be done immediately.
As the people of Britain voted, but we're not going there. That's political.
Yeah, but highly unlikely they can't do it that way. They're going to slowly ease it out. Yeah. If that's the case, this market's really going to take a hit. 35% chance. Yeah. 50% chance that
it's range bound.
Range bound.
Now explain range bound.
Okay, so for instance, it could potentially go back down to the lows of December, potentially, and it could do exactly what it's doing now. We're flirting with all-time highs. Yeah. Since the bottom in Christmas Eve, this market's up 12%. And I read this. This is the highest rate of growth for a quarter since 2012. So we had a strong movement back. Yep. And again, any stock that was sold in December, you lost a lot of money, unfortunately. A lot of opportunity.
So in that range bound thing, you kind of got like, where it's going up and it's hitting the top, and then it comes back down to where it finds support, and it just keeps kind of going. But basically, it's a channel that it's going in. But the idea in the long run is that it's going up.
Well, Riverfront believes that ultimately it will resolve itself to the upside because earnings look good. Yeah. Under that scenario, the Fed is not going to raise interest rates.
Right.
So this thing can go status quo for a while until there's enough data to push us through. 15% is absolutely optimistic. Everything works out. Trade deal's done. We've got favorable deal with China. The Japanese and European markets will continue to have robust, and a lot of that is due on, we have a Fed that had lowered interest rates for 10 years. Yeah. The ECB, which is like our Fed, has been also lowering interest rates, and they're making capital available to corporations, okay? If this continues, and they believe that will continue, and it really should continue, then this thing really can take off. The Brexit situation is resolved without any major consequences and the like. 15% probability. Now, if that happens, we're off to the races. This bull market resumes 15% chance. Now, my strategy is this. 85% probability that we're going to be range bound to down, okay? In that scenario, for the last 10 years, we've gone straight up. In this scenario, it's a good time to write the covered call. And I think we ought to do a little tutorial on that. For instance, a client just wrote a cover call on a company called Novo Nordisk, and it was give somebody the right to buy that stock from him at $50 a share and it expires tomorrow. In his example, he got it to $2,100. Boom.
And
the
the
next
stock's
day.
only at like 48.
48.
So it can't be sold. It won't.
The stock will not be taken away.
Right.
And even if it was 52, and
Then
he
he
had
would
to
have made
sell it at
52.
50.
Yeah.
Well, no, he wouldn't have. He would have sold it at 50.
Right.
He would not have got $52.
Right. So he would have missed out on the 2 per share,
Yeah,
but he would have gotten the 50, and that's fine. So you're betting a positive bet, if it makes sense. That you're either going to make money or you're going to make a lot of money.
Right.
That's basically what you're saying, because you're writing your cover calls obviously for more than what it costs at the time, right? So say it's at $100, you write a cover call for 125 or something like that, and you got like 3 months to do it. If it doesn't hit 125, whatever money they paid you for that cover call is your money to keep. If it hits 125, well, hey, you just went from 100 to 125. You basically bet a positive bet. So
Right.
either way, it's a win-win situation. It really is. So,
Well, let me go back to Novo. So if we sold Novo at 52, I'm not upset about that, because if we're in a range-bound market and these stocks go up and down, if we want to, more than likely Novo would go back under 50 again.
Right.
What can we do?
Buy it
Well,
back.
we can buy it back.
with all that money that you bought for
Right.
the cover call.
Put it aside. If we want to own it, we own it. If we don't want to buy it, we don't buy it. We made a lot of money on Novo. I think we paid $45 a share for it. It's $50 a share now,
There you go. So
or roughly 48.
what about gold? What are you thinking about gold? at this point?
Gold needs to be owned because gold in itself, the commodity, is down very low.
Okay.
And the reason it's down is as the markets have done extremely well over the years, people don't want to own gold.
You don't need the hedge at that point.
You don't need
It doesn't
it.
feel like you need
Well, the
it.
hedge didn't work.
Yeah.
Now, if we range bound, gold should work, because you're going to see people kind of taking money out of stocks and getting into that.
Right, and you're into the minor gold. You're not
Minor
into- yeah.
and physical gold.
And physical gold.
There is a closed-end fund that trades, and they own physical gold, and it's put in it's Royal Bank of Canada is custodian it. So if you buy shares in that, guess what? You own physical gold. You don't take possession of it, but it's a very good way of owning physical gold. We also strongly believe there's a huge debt overload, and a lot of this debt is the junk bonds. And if this junk bond market takes a hit, we have investments that, if the junk bond market takes a hit, this investment, it's like a bond fund that goes inversely, it will go up. So these are little hedges, along with the cover call writing. The point is this: easy money's been made, and for someone to position your investments, and like even me, and do nothing with it, I think that's a huge mistake. We got to be a little bit more proactive, and it's going to be a little tougher to make money this year. Cover call writing is the way to go, in my view. If we are going to buy stocks, the other thing in that report, international stocks are 40% undervalued.
Yeah.
Developed countries undervalued. United States stock market is about 13% above fair value. Above fair value.
And
Doesn't mean
these are 40% below.
40% below.
That's
Now,
a good deal to be buying now.
that's what you do. And the thing is, these European stocks have virtually done nothing. So we have a closed-end fund, FEU. The top 50 European stocks that pay dividends. We have SoftBank.
SoftBanks in there?
We have Novo Nordisk, another Swiss company, I believe. Magna International, tremendous company, and they are at the forefront of self-driving cars. And they're Canadian.
Okay. So you get half a car, like you used to be with the Canadian dollar?
That's not. But Magna is a fantastic company.
Yeah.
The point is this: we have things like WebTech and SoftBank and Apple and whatever else.
KKR.
Oh, KKR is another one. Here, very quickly on KKR. That was a master limited partnership that changed its structure last year and became a common stock. So this year should be the last year K1s are issued. Okay, so that's huge. That's a great investment. And again, if you own that, you have money all over the world. Another diversification. So this stuff has been well thought out. I've done my homework, and I have done my homework, and that's kind of where we stand.
So we've had a good 10 years at this point,
Right.
And now we're kind of looking at some things and saying, let's just be careful. Let's invest in the things that are emerging markets. Let's invest in the foreign stuff, and let's be careful with things like gold and such like that. That'll kind of maintain the value for us, and move ahead with optimism. We have optimism, but
Yeah.
but if the market does what it does and tends to go different direction than
Right.
we want it to, we're prepared for that. And if there's losses, the losses are less than they would be
Right.
if we left it alone right now.
Right. And the cover call writing, if we calculate it, there's a good chance that we're going to be able to make 2 to 4% in addition to dividends. And if this market's flat, you virtually make very little. But if you have dividends and option income, you're going to end up with a decent rate of return for the year. So that's kind of it. I don't think there's anything else. We're going to put a chart up on SoftBank, I think, and I think maybe we put a chart up on the overall market to show that the tremendous dump in December and the fear factor through the roof. One thing we never do, you always avoid the crowd at extreme levels, and that's the third tenet of Riverfront. If everyone's dumping, you better sit back and not do anything. When everyone's crazy and buying, we certainly don't want to buy into that. Like right now, everything's moved up. Do I want to buy today?
No.
No.
It's high. Buy low, sell high. That's the idea.
Or not sell. Just hold on and just stick it out. And that's the name of the game, and that's a Warren Buffett, and that's the discipline that I've basically adhered to for 20 years.
Yeah. All right.
So call me if you have any questions. I would be calling too, just to see how everything's going. This whole thing with the brokerage firm that I resigned/fired from is getting resolved. Hopefully, I'm working with a local attorney, and hopefully we just get this behind us and move on. So that's kind of where I am at this point.
There you go. We got 35 years of expertise right there, and it doesn't matter where you're employed. It just matters what you know.
Right.
So we're looking forward to some good stuff happening. Stick with us, and have a good and holy week.
Yeah. Take care.
Happy Easter.
Happy Easter.